Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit Iniquities. In this video, we'll be talking about a company where Rakesh Jhunjhunwala has bought 18,33,150 shares during the last quarter. Now, this is a personal favorite of Rakesh Jhunjhunwala, and his increasing stake in this company seems to indicate bullish days ahead. Now friends, if you have not already become channel members on Profit Iniquities, please go to the blue join button below, click on it and follow the steps to become members, which will entitle you to member only privileges on our channel. Also friends, if you like the content that we produce on our channel, please don't forget to like these videos, share these videos, and if you have not already subscribed to our channel, please click on the red subscribe button below. This will help you get notified whenever we upload a new video. Please watch this video to know more about this stock. Now the company in question is VIP Industries Limited, which is available at Rs 472.35 and the face value for it is 2. The March 2019 holding for Rakesh Jhunjhunwala in this particular company now stands at 4.99%. The symbol for it is VIPIND. Now VIP Industries Limited is a holding company engaged in the manufacturing of hard and soft luggages. The company operates through two segments, which are luggage, bags and accessories, and also furniture. The company has manufacturing facilities at various locations across India, and its major brands include Carlton, VIP Bags, Sky Bags, Aristocrat, Alpha and Caprese. Now looking at the one-year chart, this company has not really been a spectacular multi-bagger and has largely been consolidating at the same levels throughout the entire year. The market cap of the company is 6,675.12 crores, which means that this company is a mid-cap one. The EPS of 10.97 translates into a price to earnings ratio of 43.06, which is much more expensive when compared with the industry PE of 30.80. The price to book ratio of 13.65 is also very expensive. The company has a dividend yield of 0.64%, whereas the promoter holding is just above average at 53.46%. One good factor is that none of the promoters' holding is pledged. Also, the debt on the books is not very high at around 5 crores. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not already subscribed to our channel, please consider doing so.